fact, we have managed recovered massively from the day's lowest point. We have recovered almost 190 points on the Nifty. Nifty Bank also is doing well, has recovered some 350 points from the day's lows.
Well, yes, Ankita, it's turning out to be a good afternoon for the markets as well, because indeed the Friday did saw a good recovery from its lowest point. Over the weekend, we had so much of news flow regarding the geopolitical tensions, what really could happen to the crude oil prices, but Indian markets are showing resilience indeed. We are almost at the day's highest point, and Nifty once again touching that mark of 24,900 mark. While for Nifty Bank as well, though it did flip-flop between the red and the green territory for quite some time on these initial trading takes, but over the course of time did build on to the gains, and 240 points of gain is what this banking index is holding on. The strength of the market is not that great for today, though in terms of the advances and declinings, it's a bit of an even Steven. The number of shares declining is actually larger, and that's where we are seeing a bit of a nervousness in the markets, while India Wix continues to be down in trade with the 2% of the cut, and quite in the favorable territory of that 14 to 15 odd range, which actually comes and gives charge to the bulls out there. But that is something that we will be watching out for. But indeed, a lot of sectors and stocks in focus. Take a look at what these life insurance companies are doing. SBI Life, HDFC Life, they are leading it from the front. Other than that, ONGC, second straight day with the boil in the crude oil prices, is once again inching higher with almost 2% of the grain. Stocks like Trent, Ultratech, they are doing well, and along with that, BEL continuing its upwards trajectory with 1.5% of the gain. What's not doing well is, of course, Tata Motors, after that JLR presentation where they have gone ahead and slashed their margin guidance for JLR a bit to 5 to 7% of the range versus 10% given earlier. A big disappointment indeed. Dr. Reddy's is down, and select counters within the Adani group of counters are hovering in the red. So definitely on the large cap indices and the benchmark indices rather, we are seeing that strength returning back, while the mid and the small end of the market is languishing a bit. But India Wix maybe can actually give some impetus to that. So we'll watch out for that indeed. But with this, let's move on, and let's also welcome our technical expert on the show today. Rajesh Bhosale from Angel One is joining us on the show. Hi Rajesh, great to be speaking with you. Good afternoon. And Rajesh, how do you see the recovery in the markets? Friday was one such day where we have seen a good recovery from its lowest point, and this trend continues on Monday as well. Where are we headed from here on?
Well, good afternoon. So if we see chart structure from the May month itself, the market has been trading in a range where 24,450, 24,500 has been acting as a support. On Friday, we tested the lower range, and from there we are seeing a strong positive traction. In fact, despite global headwinds, we are doing pretty well. So the bias remains positive. The approach would be to consider buying on dips and to lighten up position at higher levels. So if we see 25,000 is the one important key hurdle to watch out for. Once that is broken out, then possibly after that resumption of up move can be expected. If we see broader markets, so advances are little fewer than the declines. So focus would be on key heavyweights that are pushing the markets higher.
Right. Rajesh, like you mentioned, hi, this is Ankita also joining in. Rajesh, you mentioned that there are global headwinds, but despite that, we are holding pretty steady. In fact, one pocket that's been doing well has been outperforming is Nifty IT, that is holding the fort really well. In fact, once we saw that breakout coming in Nifty IT, there's been no stopping, especially the mid-cap IT space. One name that really stands out is Coforge. Talk to us about Nifty IT and, what is your sense? Will it head higher? How should one look at this?
Yeah, so Nifty IT, if we see, was the outperformer of the last week. It was up by more than 3%. Recently, it was not participating in this broader market uptrend, but the momentum has shifted on the positive side since last week. On the weekly chart, we are seeing some structural bullish formations, so we expect this space to outperform in the near term. If we see the chart of Coforge, this has been one of the outperformer from this space, and we expect this positive momentum to continue. The stock is continuously moving in a higher top, higher bottom formation, where every dip toward 20-day exponential is getting bought into. So 1750 is what we are seeing as a strong support, and we expect this positive momentum to continue towards 1950 and then towards the 2000 levels.
That's the take coming in on the benchmark indices and especially the IT pack as well. But Rajesh, give us your stock picks as well. Any stock that is standing out for you right now?
Yeah, so since we are talking on IT space, one of the counter that I'm liking is heavyweight TCS. So if we see TCS, it is showing strength in today's session, and after a very long time, the stock is breaking about 50-day exponential moving average. Also on the futures front, we are seeing long formation, and a range breakout is also witnessed on the daily chart. So TCS currently quoting somewhere around 3500 can be bought with a stop loss of 3420, and the target that we are expecting is 3660. My second buy call is also on heavyweight ONGC. So if you see the chart of ONGC, it has been trading in a range, but we are now seeing a range breakout above the 250 levels, and after a very long time, the stock is holding above its 200 DMA. So we expect this positive momentum to continue. ONGC can be bought with a stop loss of 251.70, and we expect the target of 265 in the near term.
Right, Rajesh. So two picks for you. You've picked out heavyweight TCS and ONGC for us. But with that, thank you so much for taking the time out and joining us. Well, these were the two picks by Rajesh, but there are a couple of other names that